to join us here at the MIT Enterprise Forum. We're a nonprofit organization. We really foster entrepreneurship and education. We have the world, and we are, yes, we are a link with MIT, the university. A lot of people ask me that. So I wanted to volunteer. A lot of people say, is this the same as the university? Yes, we're chapters around the world. And we foster education. We have these forums on a monthly basis around the globe, different subjects, and in different formats. So I want to be respectful for also to our attendees who are on time. So why don't we get started? Stephen, introducing a little bit yourself, the concept of what you're doing, and moreover, you know, your experience in blockchain worldwide. But let's just start with the basics. You know, there's still a lot of myth from reality in the world of blockchain. And the whole idea of creating this three-part series is to bring facts from, you know, fiction and to really share from the experts in the field what is blockchain. So why don't you get started? Let me introduce briefly, because you have a quite big resume, but I want to introduce you as the CEO and founder of Moneta Pro, and also another Magmo, which are two very interesting and very different but complementary venues that you have going. So maybe you talk a little bit about it, and that makes the intro about blockchain. Go for it.
Sure, perfect, thank you. I have it down. So lifelong entrepreneur, never had a job. I'm technically unhireable. So for anybody in college, don't give up. I started retail stores in college. I wrote 3 books when I was 20 around credit improvement, had an infomercial. But the arc of my career started when I was 22. I went to work at Travelers Group. And in 6.5 years, I read 357 books, sales, psychology, motivation. And I developed a program, which I still have over my shoulder, called a bullseye belief system. So I became very good at being specific, targeted, and focused. And I've used that system to build 11 companies. 3 are public. 5 of them were the first one in the world to ever have done something, which is kind of unique to be able to create companies that have never been done before. 96, I started my first internet company. Nobody in the world was doing merchant processing. Websites didn't exist. And we took that public in 99. It went on to become PayPal. And in 2000, I tried to create a global currency. I wanted to create an electronic currency for business settlement. And the problem we made is we called it a global currency. And people asked me the wrong question about, quote, currency. And so we went on, we built enterprise software, Homeland Security. Fast forward to 2017, 2018, blockchain was coming around, Bitcoin was out. A friend of mine, Brock Pierce, I helped him get on the Bitcoin Foundation. And to me, Bitcoin was a glorified gift card backed by a penny stock. So in 2012, 2013, I didn't understand it. When blockchain came around, I got a little more interested, which moves us forward to Moneta Pro. We've won 8 contests around the world in blockchain. It's a marketplace for corporate barter, but I'm going to end with something that's going to bring us back. If anybody today says they are a blockchain company, they don't know what they're talking about. I believe there's no such thing as a blockchain company any more than you're an internet company. Back when the internet started, there was internet world, and oh, you're an internet company because you had a .com. No, you have a website, you're in real estate, you're an attorney, so blockchain to me is a technology enabler regardless of what industry you're in. So I'm a big proponent of it. I love the technology, but to me, there's no such thing as a blockchain company.
But what is blockchain? Let's just start with this. Although I believe most of the people joining us may know, but we're recording this to share with others that may know a little less than us.
Well, can we do share screens?
Yes.
All right. Oh, it's disabled. If you enable it, I'll jump in. Otherwise, so when people ask me what blockchain is, I don't really know. But there's a reason that I say that. Let me see here. Will it come on?
Hold on. Let me try to do it.
Okay.
Hold on a second.
If I can, because I have funny screens that actually make this a whole lot more fun and interesting and relevant.
Right. Would you be able to grab it now?
Let me say, share screen. Nope, still disabled.
Let's see if we can do it.
All right, last try. If not, that's okay. I'll work around it.
Let's see. It's interesting.
Not
Let
working?
me see if I can.
Yeah, it's up in the settings side to
yes. Enable. Yes, and this is where I'm getting at, but it's not wanting to do it. Yeah. So why don't you get at it, and if I get to do it, then bravo. How is that?
So the speech that I give a lot of time is called Unblocking the Blockchain. And the tagline is, I'm not going to teach you how the blockchain works. I teach how it works for you. And what I mean by that is I'm a professionally trained speaker, so I know how to trick the audience. And I'll trick the audience, say, how many of you know how the internet works? And if you raise your hand, people raise their hand. Oh, I know how the internet works. The first screen that I put up is a bunch of HTML coding. Like, the internet works on programming language and code. I don't know how to code. I don't care how to code. How does the internet work for me? The next page I put up is my website. I know how a website works as a business tool. I don't know how it works as a technology. So when people ask me what is blockchain or how do it work, I don't know. I mean, I could probably figure it out, but I don't really care. I've looked at what are the business applications, what is the impact of what blockchain does for an industry. And what I tell people, I say, look back at the internet. When the internet started, I've been in since '96, and people are like, internet's going to change the world. Well, it did. But if you break it down, the internet did two things. That all it did was two things. It did a million, but it did two things. It either disrupted companies. In some cases it did, and it took a while. The Ubers, the Amazons, the Airbnbs. But in most cases, it displaced an existing process. The internet enabled email instead of regular mail. It enabled online chat instead of telephone. It enabled online banking rather than in-person banking. The internet displaced processes, but it didn't completely disrupt every industry. And that,
you can share your screen now. You can share your screen now, Stephen.
Okay. Ah, there we go.
Yeah.
Yeah, and so this is kind of my little joke is before the internet, there was no internet. And so how does it work? And then I say, how many people know how the internet works? And this is how the internet actually works. And I don't know coding. I don't want to know how it works. I know how a website works. So the internet to me was nothing more than a tool to accomplish a goal. And so blockchain to me is the same thing. Blockchain is the underlying technology. Now, the coders, the engineers, the people know, they need to know how it works. The majority of people will never know how the technology works any more than they know how the internet works. They need to understand the process of what blockchain can do. And that was kind of what this is showing is the internet created a bunch of disruptions more than it did, or displacements more than disruptions. The internet created efficiencies, and blockchain will do the same. And then I sort of break it down because a lot of people conflate things, and I can keep going, Alice, or you can ask a question here, but the conflation I think is important.
Absolutely, go for it.
So a lot of people go, oh, you're in blockchain like Bitcoin. Or if you say, oh, Bitcoin like blockchain, or oh, blockchain, oh, cryptocurrency. They're conflating everything together. So to me, Bitcoin is, and we won't go fully into it. To me, it's like a gift card. It's a penny stock. It's kind of like, to me, Bitcoin now is more like a unit of gold. But Bitcoin's built on blockchain. Blockchain enabled Bitcoin. Then you have cryptocurrencies or coins. Those to me are not going to be currencies. The crypto world are glorified penny stocks. I bought Ripple XRP at 28 cents. I sold it at $2. That's a good win. I bought EOS at $9, thought it would go to 12. It dropped to 3. Like, they're not designed to be currencies. If we're honest with ourselves, they're glorified penny stocks. You buy a penny stock at 10 cents and you hope it goes to $1. You don't buy a penny stock because you think you get equity. You don't buy because you get compliance on the board. You buy because you want to make money. And so this term cryptocurrency, I think, is screwed up and confused the industry, where people are like, oh, well, what can you spend it? No, it's, I buy it at 10 cents, I sell it at $1. And then the blockchain technology is the enabler for tokens and cryptocurrency and smart contracts and land trust and integrity through a supply chain and automation of update. Like, the blockchain is the enabler, but they are different. So that to me is when somebody says, are you a blockchain company? I'm like, well, we use blockchain for one component, but no, we're a fintech platform for corporate barter. So I like to draw these distinctions.
And I like very much the analogy you did with internet, because it's such a disruptive technology. I mean, blockchain to web, right? So if it really comes to the full fruition and adoption, which, you know, I believe that you foresee, so do I, it will really create a very interesting landscape in our world, you know, especially with, you know, now we have to really trust, you know, which is one of the issues I want you to touch on, I'm sure you will, is why blockchain offers trust, you know, in this so virtual world. Aside cryptos or Bitcoin, you know, because I love the analogy also that they're glorified penny stocks, but now they're treated as a commodity. Is the gold of today's world.
Yeah, well, Bitcoin to me is sort of like gold, because it's a certain unit, it's a finite number, there's only so many, it can be sliced, you know, and I think I have it, a gold bar, a brick of gold is $500,000. And that's for one actual brick of gold. So a unit of Bitcoin could easily go up to 40, 50, 100, $200,000 just because it's elastic. But Bitcoin's the great equalizer. The concept of trust is really fascinating. Again, I've had 3 public companies that are called microcap, OTC penny stocks. The problem we have in the world of investing around penny stocks, especially, is every time I go into a public company, I don't really know how many shares have officially ever been issued. I don't know how many people have secret shares in their pocket that they can go sell and drive my price up or down. If I go into a public company, I'm locked up in what's called a 144. I have a 6 or 12-month hold where I can't sell the stock. Somebody else may have free trading where they can sell it and dump it. So what's missing in the world of finance, just picking one industry, is transparency. It's, to me, the trust is less than the transparency. Blockchain's fascinating. We've issued tokens. We have a token called MON, M-O-N. It's Moneta Pro for money. And the MON token is separate from our equity. But in all of our documents, we say we issued 200 million MON tokens, and here's how many have been authorized. Anybody can go out and pull up on the mainnet the fact we have 200 million tokens and how many have been issued. There's transparency, which translates to trust. We can't defraud the system. So that's where I get back to what blockchain's enabling eventually in the finance industry is it's going to displace traditional stock companies and transfer agents. It's going to provide a higher level of trust and transparency than banks do or stockbrokers. And that's just one industry. It's going to do the same thing in contracts around, you know, real estate, where people can manipulate contracts. It's going to do the same thing in food integrity through the supply chain. I might even have some of that in here somewhere.
Do you happen to have one of my favorite subjects besides food, since I'm a foodie? Art, because that's how I got into this beauty. My solving the problem of my industry in art, which is provenance, is either I have the real Picasso or the attributed to Picasso or the fake Picasso. The 3 are beautiful, the 3 are valid, and they have a place on earth, right? Now, price point may differ by a few 100 million between one or the other, right?
Yeah, and it's sort of the same thing as and again, as simple as I can explain it, because I know how it works in practice, not technically, but in theory, you have basically a 16 or 20 digit number that is specific to a piece of art. So that piece of art has one unique identifier, and that identifier is on the mainnet. Anybody can see that that identifier is the only one. So if somebody tries to duplicate or fraudulent or forge another piece of art, it's going to have a different sequence or serial number tied to it. So you can create official provenance tied to an asset, whether that's a car, whether it's a sneaker, a shoe, whether it's a painting, whether it's a piece of music. The fascination is you can now control music and things like that. So again, the blockchain to me in that world becomes a tool that it's not going to disrupt the art world. It's going to enhance the ability for the artist and the owner to have provenance, which should increase the trust, transparency, and value of the world of art. So it's an enabler around different industries. It's not a blockchain company.
Correct. And one great example being done in Europe, especially Italy, that, you know, is surrounded by that tavola, which is the table, you know, food is the center of that culture. And right now there's a lot of things happening in the food world. And with all these, you know, happenings in climate, or, you know, happenings or mishappenings in disasters that in climate that impact food, it becomes so relevant, you know. And that's another, you know, the transparency, the accountability, the trust that, you know, this is a real organic fish or shrimp versus your farm raised, which is equally good but slightly different, right?
I agree, Alice, but I'm going to make 2 points that are corollarily adjunctive to that, meaning I love the example you gave. The reality and practicality for big companies, it's a phrase, people do more to avoid pain than gain pleasure. Yes. The pain within the food is the security of a lawsuit. So the example I use, again, it's not always the best one, but this is one we're helping implement now, is you go to Walmart or Costco or something and you buy tuna that you think is fresh tuna from wherever. You go home and somebody in your family gets sick and dies. You're going to sue Costco and Walmart and the food truck and the wholesaler and the refrigerator. You're going to try and sue everybody you can as liability. Costco's going to try and say, oh, we aren't liable. They're going to pass the buck. Where blockchain provides something very interesting for food security and protection, it's part of the equation, but it's not all of it. Again, this is how does it work? So now when you catch a fish in Sri Lanka, that fish, if it's entered into a blockchain contract, is going to be to that fisherman, to the GPS, to that area where now you know exactly who caught it and where. Then it goes to the guy that's going to clean it. Then it goes to the guy that's going to put it on a truck for 3 days that's refrigerated. Then it's going to make its way through the chain. The guy that refrigerated it for 3 days claimed that fish was in a refrigeration truck. He had the refrigeration unit turned off to save gas and make money. The fish spoiled, but you don't know until the end. So the blockchain contract would not solve that, but it would show you all the steps along the way. What's happening in the real world now is they're starting to marry or wed. The refrigeration trunks are tied to an IoT, which is an Internet of Things, another device. The IoT device registers the refrigeration temperature every 10 minutes and writes it to the contract. So now you know that truck was on, you know if it hit a refrigeration, if it was held in a... So marrying these technologies is going to provide food security and transparency. The marketing team are now coming back saying, oh, let's market this as environmentally friendly fish caught in Sri Lanka. So the marketing team has a different output from where the fish was caught, then the liability team, which cares about the security through the whole supply chain. But the companies doing that are doing it around food security and liability, not as a blockchain company, but the technology is enabling that as a process.
Where do you see this going vertically wise into a unicorn? If someone were to say, this sounds so interesting, you know, maybe is my vertical the one that could potentially be the next unicorn vertical?
Banking is ripe for disruption, financial services, business payments, service providers. If you look at what the Winklevoss twins have done with Gemini, which is an exchange that allows cryptocurrencies and tokens, Revolut, which is a great bank out of Europe, you know, unicorn using blockchain for money transfers, Ripple on the technology side. You know, I don't know, because a lot of the technologies, like I said, blockchain's going to be just integrated into processes of what people do differently. So a bigger percentage, just like the internet, you're using the internet now, but there's an internet service provider that's probably a unicorn. There's somebody that's provided the Wi-Fi. There's somebody that sold you the device. Like, there's people within the food chain and value chain of the internet. I don't know, but I know when you look at the top line industries, you can look at an industry and go, all right, how did the internet affect banking? And what could the blockchain do to make banking better? And that's where I think it's going to change. One area in banking I think is easy and not everybody understands it is the world of stable coins.
I'm glad you touched on it. I was going to direct you that route. Go.
To stablecoin. Stablecoins to me are super easy because people are like, oh, should I invest in a stablecoin? It's counter to the definition of a stablecoin is theoretically stable. So how do you invest in something that's designed to be stable? So I'm going to answer it in two ways. Number one, how are banks doing it now? If I wanted to wire transfer, you know, $10, $15, $20,000 to Alice, here's the traditional way I have to do it. I have to go to the bank, wait in line, hopefully with COVID, fill out paperwork, wire transfer, all the information, pay $25 or $30 for the privilege of sending my money to you. Then I have to get there before 2 p.m. to make a cutoff, send it to you a day or probably two later, maybe a day, but most likely two, it'll get your account. You have to pay $25 or $30 for the privilege of receiving my money. And all along the way, the banks make interest while it's sitting there for the 2 days moving through the network. Like, that's how money transfer happens right now. If I wanted to send you $25,000 in Bitcoin, I need an address, an email address or a wallet. I send it to you. I don't need anybody's permission. I send it to you 15 or 20 minutes later, it'll be in your account for fractions. So digital transfer of money is going to completely displace and disrupt SWIFT, Fedwire, ACH, all of these legacy sides of the bank. How do stablecoins work? And my theory is very simple. It's coming into practice now. I have money in Wells Fargo. It's traditional cash fiat. I'm going to switch and convert it in Wells Fargo to a WFT. It'll be a Wells Fargo token worth $1, a stable digital token. I'll email it to you. It'll hit your Chase account as a Chase token. And then you'll convert it up into cash. And the fees for that will be minuscule. It'll get there in 15 or 20 minutes. It's still a stable token. It's still digital settlement, but it's just displacement. That's technically what Ripple is. A lot of people know Ripple XRP, the token. Ripple, the technology, is money transfer.
Right.
Where do people make money on that? Where's the unicorn in that? Is what's called interchange fees. Every time I send money, I still do pay a fee. If I have Bitcoin in, you know, Voyager accounts or Gemini accounts or Binance or Bittrex, we've got, every time I do, the exchange or somebody's making a transaction fee, an interchange fee. So the company that provides the service for a stable coin makes money. You don't make money on a stable coin because it's designed to be stable. So that's where the confusion is. People, you don't invest in a stable coin. You might invest in the company that's transferring stable coins because they make money on the transfer.
Correct. Correct. And that's such a fascinating world in today's economy, thanks to COVID, and the post-COVID era is just that. We're going to become a more automated society in all aspects. Our moms that probably will never shop online for a supermarket, at least, now they're used to. They're like, why do I need to go? So these, there's some countries that the currencies have a lot of disparity due to instability of the country politically and or inflation. So this type of ripples of those regions are solving a big problem, you know, on the transfer, and everything is blockchain based, you know, blockchain technology based.
And that'll segue us a little bit, not to be self-serving, but Moneta Pro, which is our primary blockchain company, even though we're not blockchain. Moneta Pro, we've built our own internal global, I used to call it, the acronym is a GBUC. It used to be called a global business usage currency. We created a true electronic currency. But when you say that, it either gets conflated with money, and people are asking the wrong questions about fiat and banking, or it gets conflated with a token, which is a tradable. So I switched it. The acronym is still a GBUC, but now we call what we created a general business usage credit. So I created basically a store credit, but we created a system in Moneta Pro for what's called corporate barter, where a company like Ford will send $10 million in cars to China, and they can't repatriate dollars out of China, but they can trade for coal. Or they might send trucks to Zimbabwe, but they don't want the Zimbabwe $1 trillion note, so they're trading for another asset. We built a closed marketplace for business settlement, where companies can list assets, they can list a car, sell it to China, receive this trade credit. It would be like having $1,000 credit in Amazon. If you had a store credit in Amazon, it can't be stolen, it doesn't fluctuate, it's not a blockchain, it's nothing to do with blockchain, it's a store credit. So we built our own internal credit currency settlement unit. Sell, get a credit, go buy something else. Now, that's the marketplace.
That's a marketplace, but did you embed it into it blockchain technology for, you know, all, you know, the step of the way on security, transparency, reliability, you know? No. Interesting. Why?
No, not, well, yes and no, Alex, not for what you're thinking. Here's the thing, and I like doing this. Everybody, for the most part, I hope, probably shopped on Amazon, right? If we were in person, I'd say, how many of you shopped on Amazon? When you click on your order history in Amazon, you get a history of everything that you've bought. That order history doesn't communicate with anything. If you wanted to export your order history of all the computers you bought to get a business deduction, that order doesn't communicate anywhere. What we did in ours is a little different. If Ford, as an example, transferred 1,000 cars, because they transferred the cars, they traded them, they didn't sell them. They have 1,000 cars that are no longer in their accounting system. Their inventory module, the biggest companies in the world run on SAP and Oracle. Those companies have accounting modules called a fixed asset module. It says, hey, if you get audited as a public company, here's 1,000 cars. There's $1 million of inventory missing. That is an audit problem. That's potential fraud. We write our invoice to the IBM Hyperfabric blockchain, and the Hyperfabric communicates with SAP and Oracle. Access Database doesn't do that. Blockchain did something a little more functionally. So we built a solution using blockchain. Now when a big company transfers assets, our invoice can go into their accounting module, attach that asset record, transfer it out. Now they're in balance, compliance, or they're, you know, accounting. Then we write a separate blockchain contract. Again, Alice, to your point, we write a separate contract to prove the asset was transferred and not stolen. Now we're providing an audit trail that an auditor, an IRS, KPMG, anybody can come in and say, oh, you have $50 million of assets missing. Where did they go? Here's a transparent audit trail on blockchain, can't be forged, can't be fraudulent. If it goes in Zimbabwe, you like the transparency of a blockchain audit trail is something that doesn't exist in PDFs and online emails. That can all be fabricated. So we're using blockchain in the asset management tool to update inventory modules and provide, audit trails for asset transfer. Nothing to do with tokens or cryptos. We're using it as an enterprise tool.
Right. And where do you see this enterprise tool maybe permeating other industries or everyday life? If we need to go deep in explaining this a little bit more in a practical way.
Mine's simple. And again, I'd pull up a different slideshow, but it's pretty simple. The bullseye belief system, this little thing over my shoulder right there, I developed these tools of how to be specific. And so what I did with MonetaPro, if I can real quick, it's a $17 trillion industry of what's called corporate barter or global trade. It's a massive industry. People try and find billion-dollar channels. This is $17 trillion. But that's too big. You can't, who do you go after? So here's how we approached it. Outside of the bullseye, we looked at the 2,000 largest companies in the world based on assets. We said, who out there has, assets, things that they own? From there, we said, all right, what are the largest industries that have a history of trading? And those are the top 10 industries. Actually, I'm just going to do this because this just makes it so much easier. Sure. The benefit of having Zoom and screen share and being able to operate quickly is visuals tend to work a lot better.
Right.
So I'm going to do a quick little switch to this particular slide because this is kind of fascinating too for the right people that understand business development and what they want to do. Stop share, screen share. Here we go. So what we did is we looked at the 2,000 largest companies in the world based on assets. Then we identified our top 10 industries, and those industries are airlines, automotive, food and drink, shipping, right? These are all companies that trade assets because they either have a commodity that diminishes or disappears. Disappear means a shipping company, when the ship leaves the port, you can't resell container. You can't resell a hotel room overnight. And so basically, we looked at the 987 companies. We found articles of 88 where they had a history of trading. That article, that press release gave us 2 companies, the type of trade and the name of the individual. Then we looked at 47 we have direct relationships with and good access. We said, who is our 10? What are our target? And that's what those top 10 are. So we were very specific in our approach because if we can get an IBM or a Caterpillar to come on, they bring all of that liquidity. So for us to become a unicorn, we're a marketplace for a big industry. We're using blockchain, but our approach is very tactical of how can we target big companies. And when we talk to them, we don't go to them as a blockchain company. We go to them as a marketplace solving a problem, but the blockchain component is on IBM and that solves a different function. So we talk about it of how it solves a function, not what it does or how it works.
Why you chose IBM as your platform partner?
Oh, thank you. I appreciate that question because you can probably tell from the bullseye that we kind of went through. So I had options. And again, Alice, because this is MIT and entrepreneurial, the Entrepreneur Forum, you have to go through the machinations. And here's how I arrived at it. Number one, we could build our own proprietary blockchain technology into MonetaPro. And that would have some benefits. We go to investors, oh, we have proprietary technology, which is fine. Or we could build on one of the other, blockchain darlings, I would call it. Stellar, EOS, Graphene, multi-chain. We looked at all of these and there's merit there. Or we could go to IBM, and IBM was slow and wasn't functional and was more expensive. Like we had to beat them over the head to build what I wanted, not what they wanted to sell me. Mm-hmm. But why did I pick IBM? My customer, if you look, IBM, Caterpillar, I can't go to try and sign one of the largest companies in the world like Maersk as a startup saying, oh, I'm a startup. I've got proprietary technology that's going to integrate in your accounting modules. Trust me. IBM
That's
for us.
Important. That's very
IBM
important.
Became a trust component.
Yes, what you said is like fundamental. A lot of people miss, especially in entrepreneurship or startups, miss that very, very fundamental. There is saying NASA doesn't fabricate all parts. They just put the rocket together.
Yeah. Yeah. And at the end, the goal is you have to know who your customer is. So if my customer are big companies are already risk averse to startups and small companies. They're even more risk averse to somebody that's going to touch their accounting modules. So IBM for me became a sort of badge of symbolism to go in and say, oh, we've built on IBM blockchain and here's the function. If I had gone in and said, oh, we built on graphene. Well, what's a graphene? We built on Stellar. I thought Stellar was a token. Oh, so you're a blockchain token. You know, my friends built EOS. I love the EOS infrastructure. Can't build on EOS, can't build on Ethereum. Ethereum at least had a little bit, because they're an enterprise type of blockchain, but Ethereum had the token. So people would start confusing you and conflating and, oh, Ethereum, well, I thought you weren't a token. So you mean your G-Buck thing is really an Ethereum token? And like, you as an entrepreneur, you have to do two things. One, you have to go in asking, why won't this work? You can't go and say, look how great I am. You have to go and say, hey, here's what I built. Why won't this work? What am I missing? What's wrong? Like, I want negative feedback. If you solicit negative feedback, that is the most positive thing you can do. Otherwise, people give you platitudes and pat you on the head. So you go in saying, why won't this work? And then you try and figure out every objection and find the best way to eliminate the objections. And sometimes that solution, like IBM may not be the best partner, but it eliminated some of the bigger objections that would have been too hard to overcome in a brand new industry, trying to educate people the difference between blockchain and Bitcoin and crypto and tokens. It wasn't a fight worth fighting.
Very interesting. So let's say some advice before we get into a little bit of a Q&A. Sure. What advice would you give to someone who wants to get into blockchain or is enticed by blockchain or sees the solution that this can bring to them?
I would answer it in two ways. It depends on what your objective is. If your objective is to build a business, then figure out how blockchain will disrupt, displace, improve some business or industry you're interested in, and figure out how to create a company using blockchain, but realize that's the tool, not the total goal. The goal is to build a company that solves a problem more efficiently. If you're looking at it because you're an engineer or a programmer, jump in full force, because the blockchain component of programming is going to have a decades-long opportunity, just like the internet. But the internet, again, I never learned programming, but when I started, I'm old. So the old days, it was COBOL and Fortran, and then it was a new language, and then probably a Pascal and a Coalfield. Like, I don't know, it's a bunch of alphabet ABCs, like learning a different foreign language. But the two biggest languages in the world are basically English and Chinese. So that's like saying the two biggest languages are going to be something blockchain related and something internet related. If you're interested in blockchain, pick a language, like pick one that you think is going to, be successful, and learn how to program, and pick an industry that you're excited about, and there's going to be huge opportunity there.
I totally concur. So let me see if we have some inserts. I see a couple things in the chat. Some people want to know where are you located, and if they can get a hold of you, well, they can see your number there. But
yeah, all my information's right there, like my little virtuals.
Yeah.
So for the most part, it's a trick question, and I'd like to be specific. I'm in Beverly Hills in LA most of the time. I have a house and offices in Chicago I go to almost none of the time. And I have an office and an apartment I have in Malta for blockchain that I can't get to any of the time because of COVID. So most of the time, LA, Beverly Hills. Otherwise, it was a lot of it was international because the travel, the blockchain was fascinating. If you think about the internet, when the internet started, it evolved over a couple of decades. Like it wasn't in European countries for years, and internet access and things like that. Blockchain, when blockchain started, it started globally.
Yes, that's a big difference.
Big difference. You've got instantly you had these epicenters around the world of Malta and Monaco and Singapore and Bermuda and Zug, and you had stuff exploding all around the world at the same time. And so we were on this kind of global roadshow of conferences where we weren't around that much. COVID slowed it down. COVID's changed it. But yeah, for anybody that's in LA or Beverly Hills, let me know. I'm not COVID afraid. I'll meet with you easy enough, or feel free to track me down on the information here.
Now, it's very interesting that you said, the analogy, we all probably, well, maybe we're a little older than some in the audience, but we had to go to an internet cafe when you were traveling, right? Yeah. There was no such thing as a free Wi-Fi in a city. It was so expensive.
Or on your phone.
No, there was not. Your phone was, it was
to an internet cafe and buy internet time per minute.
Know? Exactly. And you say, oh, well, maybe I stay in this city 5 days, maybe buy a little more, so I pay a little less, because it was still costly. I remember 25 euros was kind of the ongoing rate to just check your email and no browse on the web, because too expensive for that, right? But it is so interesting that you said this started global. The other one was little by little building up and still having to be adopted, because internet's still not adopted worldwide yet. All of a sudden we're in some third world countries and we can trade in, crypto or, any kind of alternative coin, right?
Yep.
So being, the global footprint of this technology, is there something in common in all these countries that got pioneering and the ones that want to adopt? So for example, Malta or Cayman to States, the regulation, the problematics, why Malta becomes the darling of Europe, right? Or Sophia. Give us a little bit of that, because that's very interesting, and also see the rapid change that other big countries realize once, oops, they woke up.
Yeah, and so again, for me, everything was this sort of, process of knowing how to target and be specific. And because I've had public companies in the US, I understand the US market. I understood that the IRS and the FCC and FINRA and everybody in the US has their own agenda, their own language, their own acronyms. And so I knew the US was going to be slow to adopt. So we started looking internationally. And again, we looked at Singapore, we looked at the Bermuda Triangle, we looked at Zeusk, we looked Ukraine, we looked all over, and we landed on Malta for what I call the 5 pillars. So there were 5 things Malta had going for it, and no other place in the world had 5. They might have had a couple. And I can share them very easy. It's simple. Number 1, Malta was working on blockchain regulation. So they were very interested in creating standards around blockchain and legitimizing it. Well, that in and of itself wasn't unique. Zug was trying to do it in Zurich and Singapore. There was some differences. Malta had already previously done internet gambling and gaming. They were at the forefront of writing laws for gambling and gaming. Not only were they very aggressive and forward thinking, they made mistakes. They made mistakes with money laundering, and Malta's had its problems in banking and corruption. So this time around, the government was trying to fix the problems they'd had before. Well, that's different than Bermuda, which was a banking process, or Zug and Zurich, and they like Malta had been there, made mistakes, but they liked being at the forefront. So being in technology was interesting. Two, they're English speaking. Mm-hmm. That was fascinating. My attorneys, the bankers, the contracts, everything's in English. So you're in the middle of European country, you know, but here's an English speaking country in the middle of the European Union. Right. So the English component was interesting. The access, and access was really important. We were fortunate. We had access to the Prime Minister, the head of the Malta Digital Authority, the MFSA, the financial services, a guy named Abdallah Kablan, who was just named one of the 7 entrepreneurs in Europe to watch. Joseph Ulil, the prime, like we had this really interesting access that not only could we see where it was going, we actually were able to influence and help participate in the conversations around some of the laws and things that were being done. So the access we couldn't get in Zurich and Singapore, we couldn't get high enough up the food chain. The fourth one is actually taxes. Zurich's taxes are astronomical. Singapore was a 0. Malta has a cool program, 35% with a 30% rebate. So as a company, your goal actually is to make money. If you, as a startup, and if you make money, which is your goal, taxes become a critical component. And we looked at Ireland and Singapore. Malta at a 5% base was interesting. And the last one, they haven't quite got there. Nobody in the world has yet. And Malta, we think will get there, was crypto banking.
Yes, yes, they already started.
Yeah, so they are starting, but other companies have kind of filled in, like Alex, I can never say his last name, Mashevsky from, Alex has a great company called Celsius. And Alex has been around for a while. The problem for us with crypto was we raised a substantial amount of money in Bitcoin and tokens. I have to run around with those tokens on a little thumb drive hidden in a place that's not where I live, so somebody doesn't rob me when I'm out of the country. And I have to pull Bitcoin off of a thumb drive and hope every time the thumb, like I wanted to put my Bitcoin in a bank, cold storage. I wanted a line of credit against it. I didn't want to have to convert. I wanted banking level services on crypto deposits. That's what
Which
was
right now, if you think about what you described, it feels like black market, the black diamonds. And this is not the intention of all this.
Yeah, and again, but if you're doing it through a bank or a custodial, you have to KYC, you have to know your customer. You have more transparency and trust. To me, I love the theory of crypto. I don't like breaking the law, but I like pushing and twisting and figuring out how to stretch it. And so we raise this money in crypto. I want to put it in a bank or a custodial. But while it's sitting there, if I have a couple $1 million in bank deposits, I have TMS and CMS, what are called treasury management and cash management services. I can set my cash up to go in a sweep account and earn interest overnight. I can borrow against it because I've got a couple $1 million in the bank. They'll give me a line of credit. And I can write checks, and then every month I can pay that off. I don't have to pull it out. Like there's traditional bank level services. That needs to translate into the crypto world because more companies are going to use tokens to raise money. If you raise 30 or 40 or 50 million through an IPO in the US, that's 50 million that'll come into your bank. If you raise it in tokens, Bitcoin and Ethereum, you need a custodial account. But if you put it somewhere, I want to check, like I want bank level services around crypto. And I thought Malta would be there by last year. I still think they'll be there this year. Now there's other companies filling in. Bill Barhart at Abra. Abra is another great, wallet to deposit. If you've got deposits in crypto, you can loan it and you can actually earn interest on your crypto deposits. You can't do that on cash. They're talking about charging you to leave your money in a bank. They're going to charge you for the privilege of leaving your money. If it's in crypto, they'll pay you interest on the deposit. Like, these are fascinating new technologies and new ways to use blockchain. So the fifth one was banking. I don't think Zurich and the Zook guys will get there. The taxes in Switzerland are out of control. You know, Singapore, so Malta's fascinating. It's still, they call themselves Blockchain Island. I wish they wouldn't. I want them to be Innovation Island. But that's why we landed at Malta.
How do you see Puerto Rico? There is a bank already as of, I believe, last year or two, entering into being a hybrid bank, fiat and cryptocurrencies. Is there hope for Puerto Rico? There's a lot of people coming to Puerto Rico thanks to Law 2022 regarding taxes, but it's also attracting the crypto world, you know?
Yeah,
so I know we turned from blockchain to
12. I think I have 112 friends down there. And
there you go.
These guys in crypto, Michael Turpin, who runs a great company called Transform Group, PR. Michael took, I think, 37 of the first 100 ICOs, the internet coin offerings. The first one ever was, I think, Mastercoin. And then Turpin led the charge to Puerto Rico. And then Brock Pierce, who's one of the legends, and Eric Poulier, there's Scott Walker, there's a bunch of the big guys that are down there. Alex Lightman just moved. Puerto Rico is interesting. Those guys moved down there for personal taxes, though, not corporate business tax. So there's a difference between living in Puerto Rico personally, if you think you're going to have an exit, versus building a company there. Trying to build a company out of Puerto Rico, you've got a different labor base, you've got a different language, you've got transport. Like, the logistics of building a company out of Puerto Rico, I think, are more challenging than other places in the world. But from a tax standpoint, individually, it's great. For me, I don't want to live on an island where I have to count the number of days to get a tax advantage. I'd rather pay my taxes and hang out in Monaco than try and save taxes and hang out on an island in the middle of nowhere. Just me personally. Everybody has a different outcome.
Right. What about the banking? Because banking is starting in Puerto Rico for crypto. So I'm thinking, at least in this hemisphere, could be what you were describing, the full banking services into
maybe, but I don't know what their advantage would be over any of the other countries there. Bermuda, Bahamas, right. Bermuda, the Bahamas, the Caymans, those countries are known for brass plate banking. They're known for creative structures around venture capital and finance. And Bermuda's got a great program in place. The Caymans have a program. There's exchange. Like, anybody can start anywhere in the world. I don't know of any advantage Puerto Rico's going to have, but they're behind a bunch of other places. And the banking's eventually going to get solved. It's getting solved here in the US with Gemini and Voyager. Some of these exchanges are acting as kind of pseudo banks at this point. I don't know of an advantage in Puerto Rico from a labor standpoint, an employee standpoint, an English standpoint.
And
but people
okay.
love it there. They love the island.
Hey, they have a couple of very good musicians, and at the same time, quite a few good musicians, and it makes great landscape for movie filming, right?
Yeah.
Never bad to have a rum.
More movies have been made in Malta than Puerto Rico. I'm not trying to oversell it, but they've done some
right.
cool.
Now, there is a very technical question here from one of our audience.
I see that from John.
Yes. What do you think about this Hyperledger fabric? Which I'm glad he touched on it, because I wanted to kind of pin you on it, but we jumped to a different subject.
Yeah, so it's a good question, and I'm going to answer it, John, as best as I can, not being technical. So the first part of the question is, what is the benefit of using enterprise blockchain like Hyperledger Fabric or Hyperfabric over a standard database? Let's take that one in first. When you look at a standard database like an Excel spreadsheet or Access didn't communicate at the level that we wanted to in the same way of functionality. So into SAP and Oracle, into these accounting modules, the ability to communicate through what's called API, it's just, program it's a, whatever it stands for, program interface. Fabric communicated into the database and attached the data element. The whole record could be attached and moved out. Whether it was SAP or Oracle, it could move that record across. Access just couldn't accomplish the same thing in a fluid way. And to be honest, John, we probably could have made it work. We probably could build MonetaPro without trying to solve that problem. But I called myself a blockchain company in 2018. We won 8 contests around the world and we raised a couple $1 million. So I kind of felt like we had to solve the blockchain problem. So we built it in because at the time it was the hot thing to be. Now we're fintech with a blockchain component. But my understanding is Fabric communicates in a way that we couldn't accomplish with Access. The second part, when you talk about centralized and run by a single company, what IBM tried to get us to do, again, technical and complicated, I don't fully understand it. They wanted all these companies to set up private nodes and run their own node network. Like, I don't even know what that means. I don't. What we built is the Fabric component, the blockchain can't be manipulated because what we're doing is we as the custodian take the record and move it from one party to another. Then we have a separate blockchain contract. We're probably just going to use DocuSign, and that we just become the official record keeper. So the audit trail becomes a public transparency record for the company. We're just holding the records. So there's not a lot to manipulate because we're not handling money. All the credits occur in the marketplace. The credits aren't on blockchain. So you can't steal our credits any more than you could steal store credits out of Amazon. You can't spend Amazon credits anywhere else. They can only be spent in Amazon. And you could try and manipulate the order history in Amazon, but to what point? So the Fabric to us allowed us to communicate easier. The blockchain's built into our solution. Companies don't see it or touch it. So we're just providing the transparency of the audit trail. I hope that answers it, John. Again, if you're technical and want to pass that, I've got guys on my team, but again, I know how it works for me, not how it works.
Correct. So, well, I think, your explanation has been very worldly, but also very terrestrial, meaning, we brought it to the not super, technical language and super explanations, but what can people correlate? Let's give the audience a little bit of time to formulate a couple more questions as we are kind of wrapping few key points that you want to transmit into blockchain. So you thought you knew blockchain.
Well, that's what I said with the speeches that I give. I tend to say, I use gold as an example, and I like the concept of gold because what do most of us know about gold? Well, not everybody knows. I'll put this one back up, but this is a fun slide to share. I ask people all the time, hey, how much is a bar of gold? What's a brick or bar of gold cost? And most people don't know. I didn't know. I had to look it up. It was 500,000. It's probably over that. So what I can learn about gold is I can learn that an actual official brick of gold is $500,000. I know I'll probably never buy a whole brick of gold. And if I do, I'm not going to get that brick sent to me unless I'm some billionaire with a safe. I'm going to have a certificate telling me that I own gold somewhere. So gold is already digital because when we buy it, we get a certificate telling us we own it somewhere. If I really wanted to buy gold, I could buy a $50 gold coin. But that gold coin goes up and down as a price, as the same percentage as the $500,000 brick of gold. But what I know about a gold coin is I can walk up and down the street in Beverly Hills and most people aren't going to take it. Hey, will you take my gold? Will you take? Bitcoin to me was the same thing. I can buy one Bitcoin unit. It's $33,000 right now, or I can buy $50 worth. But as a percentage, it goes up and down the same percentage no matter what amount I own. So Bitcoin to me is sort of this great democratizer that allows anybody in the world to participate in the financial system in a way that you can't go buy you can't buy a single Amazon stock. Well, with Robinhood, you can now, but before Robinhood, nobody would sell you one share of Amazon, and they wouldn't sell you $100 worth of a share of Amazon. Bitcoin's this great democratizer. And so that's sort of, you know, when we got into this, these are all ICO stuffs that don't matter anymore. Blockchain and the examples. So I don't know, Alice, where do we wrap up? I can kind of go all over the place with this, but I like to stay focused.
Yes, let's try to keep on point. A takeaway to summarize like an elevator pitch. What is Bitcoin for Steven?
What's Bitcoin what?
What is blockchain? I apologize. We were talking so much about what is blockchain for Steven? Give me your elevator pitch if we need to do a closure.
Blockchain is an enabling technology that helps companies potentially be more efficient. It provides trust and transparency in a way the internet can't.
Bravo. You summarized it perfect.
Yeah. So I think all of these people that talk about trusted networks across distributed, like a business guy's like, I don't care about that any more than I care about how FTP works for emails on my cloud server. Like email allows me to send electronic information in a quarter second versus sending it through mail. Oh, I get it. Like blockchain to me is an enabling technology that improves processes.
I love it. I love the analogy with web. I'm really grateful that you were able to join us tonight. We're wrapping up a little bit earlier. I'd rather, you know, they have a saying short and sweet, but no, we already answered those questions. So I think we can call it for the evening, unless you want to do some closing remarks.
Closing remarks. To me, the industry right now is fascinating. The one that we're tracking and trying to get people to understand is especially around using blockchain technology for financing. And originally this thing was called ICOs, initial coin offerings, takeoff of IPOs. I think blockchain is going to change the financial services industry. And the reason that's important is right now, the market cap of Bitcoin, BTC, for argument's sake, let's say it's $1 trillion. It's about 750 billion. People are comparing Bitcoin to gold, which is fine. The market cap for gold is 10 trillion and Bitcoin's 1 trillion, which means if you compare Bitcoin to gold, it could go up 10 times.
Right.
The stock market in the US is $37 trillion. The stock market internationally is $97 trillion. What does that mean? The stock market means here's a company that used the stock market in an exchange. They use stock to sell to the public to raise money. Blockchain is going to enable companies to go direct to their consumer to raise money and not have to go through Morgan Stanley, these big internet banks. Like the whole $98 trillion industry of financial services is going to be turned on its head because blockchain is going to enable people to go direct. So that to me is fascinating. The last point real quick is, I was asked earlier today, if I can, Alice, I'll wrap up on this. I was in a different event and somebody said, if you could go into the future and learn something and come back, what would it be? And people talked about climate change and medicine. And my answer was simple. And I'm going to answer it, which was part of my second point. They'll converge together. I said, I would go into the future 10 years from now to see what the price of Bitcoin is. And I was quiet and I looked at everybody on there. I said, I bet most of you think it's because I'm a greedy capitalist and I want to make money. I said it has nothing to do with that. Again, my slide that was in here before, 98 to 99% of the world's population has never had access to financial instruments. They don't have access to investing in stock and stock markets. And Bitcoin is the great democratizer of investing. If you've got a kid in Bangladesh on a cell phone, a person in the middle of Zimbabwe, you know, a guy in Mexico making $300 a month but could invest $50, the opportunity for a global population to invest in a commodity, an asset, a token that the bank can't steal, they can take on their phone and transport around. The global implications of transferring wealth down, to me, is fascinating. So I wanted to find out the price 10 years so I could come back and tell everybody in the world, I know the price, buy now, buy, it will change your life. So the blockchain world to me is this amazing democratization of investing opportunities that I think will change the world because it's giving people access to things that they can't do without it.
Agree. And I'm glad Mela typed, she had her hand raised and she typed two interesting and different questions. One has to do with processes and another one, what are your top 5 to invest? Well done, Mela. We can't have a Steven in the audience without asking the last, right? So
yeah, so for Mela, the financial trading processes, so it's all kinds of different things. Like I said, right now, if I want to transfer money, the financial system means I have to go to the bank, fill out paperwork, and pay. If I want to send somebody Bitcoin or crypto or even Tether, like my dad didn't understand crypto and Bitcoin. I was sitting at home over Christmas when I was watching, I'm like, oh, Bitcoin's at 19, Bitcoin's at 20. My dad's like, I don't get it. I'm like, okay, watch this. And I transferred $100 to him in what's called Tether. So Tether's just a stable coin. I said, look at your phone. I sent him $100 while we're sitting there watching a football game. And I said, that is what digital's going to do. So the financial processes is how do you transfer money? How do you transact between individuals without needing a bank, without needing a notary? When you move out into stock, for us to be able to raise money going direct to the consumer and not have to go through a bank or a brokerage firm and pay lots of money, the direct connection eliminates the middleman. So there's all these processes you have to go through to go public. Those processes are going to change or disappear, and the whole financial services industry is going to change. So that's what I mean by processes. What kind of processes? It's all kinds of direct to consumer, direct peer-to-peer that we've needed banks and third parties for, and we don't need that anymore.
Totally true. And which are your top 5 picks to invest in?
Bitcoin, cryptocurrency, ETF, my top 5. Well, so my top 5, I'm going to tell you, and not all of them are doing well because it depends on when I buy in. I'm still a big fan of Ripple XRP, even though they've got some lawsuit challenges in the US. I think that'll get fixed, but Ripple's got such a big audience that people are trading the token. They don't understand what Ripple really does. When they finally figure out Ripple actually provides money transfers for banks and Wells Fargo and things, I think XRP will go up. And Ripple has elasticity. It's already been up almost to $3. So for it to go from 30 cents to $3 is a very easy move. It's easier for Ripple to go from 30 cents to $1, which is 2.5 or 3 times or 3.5, than it is for Bitcoin to go from 30,000 to 150. So the elasticity is there. I'm a proponent of Link. I bought Link at 15. It dropped to 12. I thought, crap, what did I do? It's back up to 24. My target for it's 45 to 100. Again, to me, they're like stocks. Link is getting a lot of play, a lot of access. I'm still a long holder on EOS. I think EOS will eventually get its act together and go back up. I own a basket of them that are kind of interesting because I was in the early days. I still own Cardano, ADA. I own Tron, which I don't think Tron's going to go anywhere. I think Cardano's going to go up. They're getting a lot of play. I think Stellar, XLM or Stellar Lumens. Stellar's going to go up because companies are starting to use the Stellar blockchain to build their solutions on. So those are some, I don't know if that's 5 or not. Those are the ones. And then the smaller ones are kind of fascinating to me. Like our Moneta Pro token is listed on Uniswap. So Sushi, some of these, but again, they're penny stocks. Can you put $1,000 in Sushi and it'll double or triple? Put 5 or 10,000 in, double or triple. Like it's what's your appetite and risk. Bitcoin to me is a long-term hold. EOS is a long-term hold. All the rest of them are kind of, what's your appetite for risk and when do you want to get out? But Link, XLM, XRP, EOS, that's probably 4. And then the rest of them are just kind of little penny stocks.
Right.
Or penny tokens.
And we have an interesting answer regarding governments and creating a central bank digital currency. Why the need of these if, cryptos don't need a bank, technically speaking?
Oh, that one's super easy. Super, super, super easy. The reason, and technically, we're already almost there. We're already there with direct deposit. So a lot of it, especially in the US, if you're an employee, you don't get a paycheck anymore. You get direct deposit. So money goes in your bank, which is digital. You have a debit card, which you're now spending, which is digital. But if you have cash, there's an entire economy outside that the government can't tax and track. If you're paying your landscaper, if you're paying your hairdresser, if you're paying tips to the waiter, there's this whole cash economy the government would love to get their hands on. If everything is digital, you can't claim, oh, I was in Puerto Rico 178 days. Really? Why was your debit card being used in New York? Oh, I'm not really in New York. You can't tax me. Really? Why is your debit card being used? Why are you in California? Like, if everything went digital, the government will know where you are, where your money is, what you spend it on, how to tax you, and how to take it.
Right.
And so I guess those are all the negative reasons. There aren't a whole lot of advantages.
Well, Finland is going all digital, I think, by 2022.
And they would love that because they will know where everybody is and where they're spending money, and they can now tax and track everything because it's digital.
Exactly. And I think that's where we're going to go in many aspects. Still vast countries with a lot of discrepancy and informal economies is harder. But even for their own safety, they're liking that themselves, among them.
And I mean, there's a lot of things with money laundering and transfer and weapons and drugs and things. If you don't have a cash society, it's a lot harder to transact everything from paying your hairdresser to buying drugs.
Right.
So it's an aspect of control. That's on the CDC side. The stablecoin side to me is fascinating because stablecoins are just going to enable money transfers to be cheaper and more efficient. But that's not the central side of complete tracking. So it's the antithesis, Alice, when you're talking about transparency and trust. And well, yeah, that's for the good side of it. The bad side is the government will see everything and everywhere.
Well, everything takes a little bit of a grain of salt, right? Even the delicious Nutella or any sweet. Without that little bit of pinch, it won't taste great. So that's the way it is. Thank you so much,
It's the yin and the yang of everything.
Thank you so much, Stephen, for your time. Thank you, the audience. We're wrapping up a little early, but I'd rather keep it on point, exciting, so we can invite everyone to our second and third part of blockchain. This is a new format we're making at MIT Enterprise Forum. We're breaking down one vertical in different components and having a takeaway. So in this case, we're going to help people to do a wallet, do a first transaction, and best practices. So thank you so much.
If you're going to do the wallet, Alice,
yeah,
there's so many of them out there. Voyager is a cool one. Those guys are doing great. But Abra and Bill Barthart, the guy that's CEO of Abra, Bill is great on camera. He actually is willing to help people set up wallets. It's a mobile wallet. So just keep him in mind. It's a, you know, he's been in the space as one of the originals. I love what he's done with the technology and stuff, and he's great and accessible.
We should connect.
Huh?
Yeah, we should connect with him. I put you the task to it. I give you the homework.
Yeah, any of the people you need connections with like that, let me know, because I love things that help further the industry and the mission for the guys and girls doing a great thing.
Absolutely. Thank you again. Thank you, everyone. We'll see you in a month's time in part 2 of blockchain use cases, and a very varied audience, representing different industries and what is it that they're doing as a revenue generating company in the blockchain space. Thank you. Good night.
Thanks, Alice. Thanks, everyone. Bye-bye.
Bye.